Hi and welcome back to Cheeky Crypto. Today guys, we're going to be jumping down into the world of Cardano, this time taking a look at a bit of a macro view. What's been going on over the last few weeks and months, and what does this mean for the price action of ADA in the future? I'm going to give you my thoughts and opinions on what I think is occurring here. As I get into the video, if you find it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Okay guys, let's jump right down on into this one. So we're going to take a look at a couple of things: smart money concepts, which is the chart that you see here in front of you right now, and a little bit of Elliott wave theory as well. And we'll kind of put the two things together and take a look at a macro weekly and give our thoughts and opinions on what we think the future could look like here for ADA. So let's start things off with the Elliott wave side. Okay, so on Elliott wave theory here, we can still see that we have this potential move to the downside at a macro level. Hasn't really changed. We're essentially just looking at coming down into this little range, 19 to 22 cent. Now, it might seem crazy to think that we're going to see that kind of drop in the market and it's a fresh new lower low. It simply is what it is until proven otherwise, right? And in order to prevent us kind of coming down this way, we have to move up higher than 44 cent. At the moment, that has failed on us. Now, it's possible that we do go ahead and breach that 44 cent, and therefore I can put to bed this particular structure here. Doesn't necessarily prevent us going down into new lower lows. It would just mean that this structure has finished and we can move on with whatever new structures start to appear. Okay, the big bearish kind of consideration there is that if we do come up here significantly higher than 44 cent but fail to go higher than 68 cent, could be a much bigger three-wave corrective structure than I would have liked to have seen, which might be something to this effect and may even take us down towards 15 cent or so, maybe even lower. So we don't really want to do that. We don't want to kind of have some short-term gain for long-term pain. We would much rather have the short-term pain for long-term gain. But unfortunately, it is what it is. A lot of people are FOMOing in and driving price into these kind of highs. But for the most part, right now, everything's still on track for 19 to 22 cent, at least as I see it, as we failed to go up higher than 44 cent. Now, as we kind of think about this current structure that is in here, we have this peak up the high end. We have almost a straight drop down here. Okay, and I say it's almost a straight drop. It's not an exact straight drop. I think we actually have a five-wave count in here. Okay, so if I were to think of this like this, we have 1, 2, 3, 4, 5, right? So we can see we have a 5-wave drop. Then we have a 3-wave corrective move up here, just like so. And therefore, the expectation would be that we would have another 5-wave drop, right? A minimum of a zigzag pattern here to play out, okay? Now, worst case scenario, as we have got a little way to come down here, is we end up with a slightly different 5-wave drop, which would be 1, 2, big 3, 4, 5. And this would be past the 1.618 times that of the wave 1. And then we'd have another 3-wave move upwards. And then finally finish that off with a little 5-wave drop. Okay, that would basically be a 5-3-5-3-5. Now, in a C-wave pattern, that's okay, because it would be that we're ending in a 5-wave drop, which would be 1, 2, 3, 4, 5, and that's okay. It would be bad, however, if we start to see another kind of corrective structure upwards and another 5-wave drop, because it would mean that our C wave isn't ending in 5, but is ending in a zigzag, a 5-3-5 on a much bigger scale. Okay, so we'll worry about that later if we needed to. But for the most part, there's a couple of different ways this can go. We've started with 5 waves down, therefore we have to end in 5 waves down, unless this is a part of an irregular or regular flat, which we could argue there's something potentially right there that could argue that's what's going on. Okay, but I think that 5 waves are a bit too deep for that C wave to be the case. So I'm going to run on the fact that this is a starting position. So we start with 5 waves. And then we go up in 3, and then we'll come back down in 5. Now, on our daily chart, we're overbought, so our stochastic is nice and high. Now, if we get rid of that, throw in our divergences, there's nothing being indicated to us from the divergence point of view here, just using the indicator. However, if I throw some volume in here, actually, no, we're okay. There's nothing really major here. I guess we've got the bigger macro piece up that side, which has already been indicated, so I'm not too concerned about that. Being overbought the way that we are basically does indicate to us that we have some moves to the downside. Historically, if we just to go back in time here, we could see that we have been overbought before for about 16, 17 days or so, just over this side. And we can see that we have been overbought so far for about 11 or so days. So, it's not exactly like we can give good timings based on how long the stochastic RSI is oversold or overbought, but it gives you a bit of an average. If we'll just start thinking it's going to be about a 2-week period that we're up in this overbought range, right? We can kind of see that that's pretty consistent across some of these larger movements that we have seen. We've been up here for approximately 2 weeks at a time. So we're nearing this one by the looks of it. It looks like we're about to kind of see some kind of corrective action to the downside, which I would actually expect it to be a 5-wave drop. Okay, so we're expecting to short ADA here quite significantly, potentially on the kind of macro timeframes. And there might be some bullish stuff on the smaller timeframes, like the 1 hour and the 4 hour. There might be still some progression to the upside on those. But on the kind of larger side of timeframes, like the daily and the weekly, they look bearish, and we should consider that they are going to be taking us down into some fresh lower lows. Potentially, at least that's where Elliott Wave theory takes us. So let's go ahead and take a look at smart money concepts. Does smart money concepts back up what Elliott Wave theory is suggesting to us, or does smart money concepts tell us that actually we're bullish and we should be thinking about the moon because we all want to be going into orbit, right? Now let's take a look, right? What does the data tell us? Well, if we were to zoom out of this, just to take a look at the bigger macro, right from up the highs, the all-time high for ADA, we did see that a change of characteristic was formed up in January of 2022. We got a break of structure, or what I would call a CTS, a continuation of the trend to the downside here. Okay, that was on May 22nd. The 8th of May 2022. And then we got another break of structure, or a CTS, over this side, which is basically the 10th of October 2022. And we have not seen any major solid lined change of characteristic to indicate that we are bullish. So because that's not there and we cannot see it on this daily chart, our assumption is that we are still in a bearish state. Okay, and that bearish remarks from change of character, break of structure, it continues. Basically, we've gone up and we're looking to go back down and break the structure. Okay, and that hasn't changed. We have had no indication that we're changing the direction of the trend, which is downwards. Now, the other thing that we can kind of consider here before we kind of get into candlesticks is this little red area just up here. Okay, this comes in, I'm going to just draw a little dashed line right there, is 59.48 cent. 59.48 cent is a strong high. This is unlikely that we are going to break this unless we have significant push to the upside. Okay, so it's a strong high signaled here with major rejection. We can see that we got rejected very heavily from this range. Okay, so it's indicated to us that it's a strong high, unlikely to get broken anytime soon. Then, of course, on the low side of things, where we do see the immediate opposite, right? We can see that we have a weak low, okay, and we came down here, even though we reversed right away, it is not as strong, the movement-wise, on the downside, or this movement to the upside, than what we had from the downside from this area here. Okay, we had this continuation and break of structure, this continuation of new lower lows, right? And down here at the bottom, we've moved up, and we haven't actually continued to break up higher every single time. Now, if we were to kind of start to move up above equilibrium, which is the area just here in this gray area, then, they might actually change things. We might get a change of characteristics. We might have a strong low and a weak high. But for now, because we haven't done those things, everything here at the moment still remains very bearish. Strong high, weak low. Okay, we can also see that there's a minor change of character to the downside here. There's a minor change of character to the upside here. These can come and go quite a bit. On the smaller time frames, there might be some bullish stuff right now, but on the larger time frames, it's very much not looking so. We can also acknowledge that we 200 EMA, just this one here, coincided with equilibrium. This actually takes me way back to early February. We can see that we're collided with the 200 EMA and got rejected. Okay, so again, 200 EMA from traditional finance is a trend filter, right? If you're below it, you are bearish. If you're above it, you're bullish. That's essentially what traditional finance would look like on a 200 EMA. Now, the 50 EMA, we're acting as support at the moment, but we are dancing around it. I don't think this is overly that important. We've seen minor breaks above here and here already, okay? And we can see that we have just broken above it here, okay? So I'm not thinking that this is overly positive right now, but we'll see how it kind of plays out. We do see, of course, this little fair value gap. The green area down here is an internal order block for purchasers, and the reds are the sellers. So we can see that we're actually kind of wedged in between these two buyers and sellers right here, right? And so basically on the low side, 31, and on the high side, 43. Okay, so we know that we're kind of wedged in. Ultimately, though, I do think we have progression downwards. We had this little yellow box area that I drew here, this one right here. I drew this in because the Smart Money Concepts by Lux Algo didn't indicate this one. But basically here is an institutional candle and a fair value gap that was left behind, but it didn't actually get flagged up by the indicator. There's also one down at the bottom here as well. So I drew these on myself because these are areas I think we're going to have to gravitate down towards, right into the discounted area until we hit a new fresh low, lower than 23. So I do think those things are coming here on the daily chart, but do expect it to take months to play out. I don't think it's going to be something that we see almost instantaneously, the point of seeing this video, right? Patience is key. And we're going to see a lot of volatility on the smaller timeframes while slowly grinding our way to the downside. For example, on the smaller timeframes on the way down here, we would have seen this initial pullback, then we would have seen, look, a bounce to the upside, right? We've had a pullback into a new low and then some kind of relief rally, right? New low, some kind of relief rally, right? So you can see lots of hopium from the smaller timeframes as you kind of see these bounces to the upside. But one of the big things when you zoom out is that you can see a gradual move to the downside, right? And I think that's essentially what we're going to see here. We're going to see something very similar, right? Move to the downside. Let me grab my pencil. Move to the downside, relief rally, move to the downside, relief rally, move to the downside, relief rally, and so forth, right? And we're going to kind of just repeat ourselves doing these quite a few times, in my opinion. So from smart money concepts, I think it's very much aligned to what Elliott Wave theory is suggesting. Essentially, we have to come down into fresh lows for Cardano's ADA. That's an unpopular opinion. People don't like to hear it, but it does give fantastic opportunities, right? Some fantastic dollar cost averaging opportunities for Cardano's ADA in the future, whether that's 3 months from now or 6 months from now. I can't time the market, but it's a good indication that the data is suggesting that we have to move on down. Now, when we take a look at this from a weekly standpoint, not only are we high, we're no longer overbought. We've actually come down a little bit here, but this recent move in the weekly close might actually bring us back up into the overbought range. Now, when we're overbought on a weekly time frame, we are talking a significant downward movement has to occur. Okay, now I'm not saying that it has to occur in like we have to see, you know, like 100% drop or anything like that. What I mean is that there's going to have to be some kind of selling pressure to ease this stochastic from overbought to oversold, right? And it can move very fast with very little movement, and sometimes it can move really slowly, and it takes a lot of price movement to bring it down. It all depends on the amount of momentum that sits behind the price. If there's a load of people selling, the stochastic will move slowly. And if there are only a few people selling, then what you'll find is that the stochastic will move faster, and it will correct down to oversold much faster than it were if there was a lot of selling pressure. So think of it the opposite way round, right? When you see this slow move in stochastic RSI, it means that there's a sustained momentum move to the downside. It's got a lot of strength behind the pressure to the downside. It can be a little bit confusing when you think about it, but fast moving stochastics are never a good sign. And we can see that within here, right? We saw this little price movement take us from oversold to overbought very, very quickly. And that is never normally a very good sign. So when we see this move, we can see that we were overbought here, for example, and we had this move to the downside here before we were oversold and ready to bounce back up again. Okay, so we have this local high here, and we can agree, and I think it's pretty easy to agree this, that we had a peak up here on the RSI, the stochastic RSI, and a peak up here on the stochastic RSI. Now, we can acknowledge that those two are very close, but one is higher than the other. Okay, and we can see that the most recent peak is higher than the previous peak. Okay, so in August 2022, it was 94. You can see it over here on the left-hand side, right? It was 94.6. And over this side, it's 99.03. Okay, so this means that we have a higher high on the stochastic RSI at the weekly level, but we have a lower high on price. This is bearish because if the stochastic RSI has rapidly moved to the upside here without going up into a fresh new high, it's indicating to us that there is a lack of momentum to drive the price higher. And as such, we should start thinking that there's going to be a move to the downside. This is what is called a divergence. It's a divergence between the price momentum and the price action. So it's important that we reflect that. So on this weekly time frame, we can see that things are not overly positive on the kind of macro time frames, at least within this kind of frame of mind of trying to kind of find the next kind of 3 to 6 months kind of price cycle. Now, when we start to zoom out even further and we kind of reflect on everything that we see, we can be a little bit more positive because we can acknowledge that there's a good run to the upside here. And this run to the upside, let me just do some sense checks, right? We want to see whether or not we have impulsive of related structures or not, and I think we do just by touching that line just about on the 1.618, and then we have a truncated wave 5 right in here. So it's a bit loose. I think it's very, very tight to kind of argue this, but we'll see if I can actually get this to measure more accurately than just doing that, because it's so close to that 1.618. And it's going to depend on the pair that you use and the exchange that you use as well. So let's see, right in here. So 252, and we got to 247. So arguably, it doesn't follow the analysis spot on. So let's just go ahead and check. Yeah, so we're a little short on that 1.618 on the USDT pair on Binance. So we can argue that this is not a 5-wave structure under that premise. Okay, so we could probably just say it's corrective. Okay, it doesn't really matter for the analysis so much because I do see this as a corrective structure to the upside anyway. So it doesn't overly matter whether this is a corrective move up here or whether this was an impulsive move to the upside. But I do see this as a wave 1 or wave A coming down into our wave B and then having up into a wave C. Okay, and so we can see this kind of 3-wave structure. Now we talk about these 3-wave structures all the time on the smaller time frames. You can see them here, right? This little tiny mini one on here on this daily chart, right? We can see it there. We can go down into the smaller time frames and you can kind of see them all over the place. All we've done here, specifically on this chart, is just draw the same thing on a much, much bigger scale, right? If we were to acknowledge everything that was going on in 2020 to the peak of 2021 and everything that's happened in 2022 and 2023 for this corrective structure, is 2024 and 2025 this run to the upside here. And if we were to come down to, let's say, that 19-cent range right down over here, how high could we possibly push, right? This is the kind of the question of, long-term holding, how high do you kind of aim? How high do you think things are going to go and all that kind of stuff? And well, we do end up in this kind of interesting area. I did a whole video on this a few months back, but if we were to kind of follow the principles of Elliott wave theory and just do it at scale like we have done here, then we could argue that we'd have a move within this corrective structure between 1 on the fib level and 1.236 on the fib level. That would put ADA at $34 to $116, anywhere in that kind of range. Now, that might seem crazy to a lot of people, and it's mainly because they get tripped up about thinking about market cap, right? They think that market cap is an indication as to how high a project could be priced, and they couldn't be further from the truth, right? We know that market cap is a calculation, and the market cap calculation is circulating supply multiplied by price, which means that the price dictates the market cap. The market cap cannot be a barrier or a resistance to price discovery. So instead of thinking that you can't possibly go to $34 in price of ADA because of market cap, you need to think about what would drive the price of ADA to those levels that would create a market cap of, X value. Now, the thing that we need to really understand in order to kind of think about price movement are the two things that are actually critical to it. That is supply and demand. Everything comes down to supply and demand. And so when we take a look at the Cardano supply and we understand that the DeFi ecosystem is going to be growing, it's going to have a lot more total value locked. We've got some fantastic staking mechanisms. We've got fantastic delegation pools. Cheeky Pool, for example, check that out in the description below. And you can understand that there's a lot of reasons for that supply to shrink in terms of what is available to be sold or purchased, I should say, for what has been available to be purchased. So there's a whole tendency within the Cardano ecosystem for hodling because you're incentivized to do so, whether that's through the delegation protocols where you can earn a good healthy yield, or whether there is DeFi protocols that you're looking at trying to get some yield farming through those, right? There's lots of reasons why you're not actually actively selling your Cardano ADA. And as a result of that, your supply will shrink. So as your supply shrinks and your demand increases, as the ecosystem starts growing, more people want to use the dApps and so forth. And specifically in a bull market when there's lots of additional speculative investors coming in, you have two key things occurring that are a fantastic recipe for price discovery. You have a supply that shrinks down as people kind of lock it up and don't want to get rid of it. They want to hodl it tight. And then you've got an increase in demand as the ecosystem continues to grow and flourish. And plus, obviously, all the speculative investors. So all in all, the two things that you need to see Cardano grow to such a number are already kind of things that are going to be happening over the next few years. A growing ecosystem, a bull run that's going to be kind of, I think, one of the biggest ones we've yet to see. So a $34 ADA doesn't seem too far-fetched in my opinion. But let me know what your thoughts are in the comments down below. I will wrap this video up right there. I've kind of rambled on for a long time here. If you found it useful, informative, smash the like button. I appreciate that. If you're new, subscribe. Don't forget to join us down in Discord, link in the description below, and let me know your thoughts. Really kind of interested to kind of get everyone's kind of price predictions on where they think Cardano ADA could go in the next bullish cycle. Until the next one though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.